I'm Dan Fitzpatrick at realmoney.com. Every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money. Well, good trading takes more than just writing down the tickers you see on TV every night and punching the buy button the next morning. I can help you know when to buy these 3 stocks I saw on TV. Today let's look at Avon Products, Ford Motor Company, and Cisco Systems. Jim's bullish on Avon Products. Kramer was talking about them last night on Mad Money, and his take is this: he just thinks it goes higher. They've got leadership issues, I guess, but he thinks the stock goes higher. We're looking here at the weekly chart, and it's kind of looking a little bit ugly, like the stock's at the top of this tight little range right there. It's also in, kind of a nasty downtrend. In fact, it accelerated. So this doesn't look that great. What about the daily chart, though? Because remember, any long-term trade starts with a short-term trade. So I'm looking here at Avon, and I get where Jim's going with this. I would just say it a different way. I would say this looks to me like it was the bottom. This looks like, higher volume here, not like massive, but it's pretty high. And we get a big reversal like this. So this is the bottom. But we've also got resistance right here. So I wouldn't be buying Avon right now, because in doing so, I would effectively be saying, you know what? I don't think Avon's ever going to fall back in this box. And I don't think that's going to happen. I think that at some point, this is going to have to deal with this resistance, falls back. If you can get it closer to 20, that's probably what it's going to do. Kramer also likes Ford. Says Ford Motor Company is a stock that you can be buying here. Weekly chart looks like it's just kind of rolling over. I mean, we zoom way out, and this really looks like just this big old long top. But just because we see this, that doesn't mean that the thing has to complete itself and ultimately we fall off the right side of the chart and wind up down here in about a year. If only trading were that easy. At some point, this thing's going to make a bottom. So maybe this is it. It's had a nice rally after an acceleration to the downside. In other words, we saw, we're seeing this kind of deal here. And then steeper selling. Well, at some point, all the folks who want to sell will have sold. That leaves buyers. That's really what we're seeing here. You can really see it on the daily chart. Little volatility squeeze, kind of a downtrending volatility squeeze, but nobody says they have to all be horizontal, though they usually are. But we got a little volatility squeeze, a breakout to the upside, but I'm looking at yesterday's action right here. This is a tombstone doji, which sounds kind of ominous. It's not that big a deal, but what it does tell me is that this short-term little buying spurt has run its course. I want to wait for a little pullback, get this puppy under 11 bucks. If it falls back to like 11.60, that would be an ideal time to be buying Ford. Kramer was asked about Cisco Systems in the lightning round. He recently watched an interview of John Chambers, and he thinks the stock could go higher. What's the chart say? Well, again, maybe Jim's right here. You can see this has had basically a complete retracement of this whole move here. So we're essentially back to where we were in early 2009, bouncing off the bottom. So I think Jim's right. The stock could go higher. This little line here, that's the 40-week or 200-day moving average, which is where the stock, guess what, failed to push through on a few different occasions before. So that's kind of ominous, at least short term. We'll look here, and you can see it. Coming out of a volatility squeeze, not a lot, unlike Ford, but it's pushing against this 200-day moving average. So what do you want to do? Yet again, I don't think this is I think Jim's right. Cisco's going to probably go higher. I think this has probably been like one big nice base. But buying the level that is closer to support, which is like right around here, is a heck of a lot better and a little bit less painful than buying right up at the top only to see the stock fall back to support. So maybe I'm being a little picky here, but that's how I keep my money. So what you want to do is, again, wait for the stock to pull back. It's going to pull back into this box somehow, some way. Look to buy it, say, in the mid-16s. There you go. If you haven't done it already, go do it now. Get over to Real Money Pro and subscribe, okay? It's a new service. It's an awesome service. Lots of good trading ideas. Some of the best are in my articles. Fitbits, 5 charts in each article, 4 articles a week. What's that amount to? You do the math. It's about 80 charts a month. You've got to be able to find a good trade in there somewhere. So get over there and check that out. Also, go over to my website, that's stockmarketmentor.com. Sign up for my email list. It's totally free, and I will send you 1 video a day with a charting idea that's designed to do 2 things. First of all, teach you how to fish for yourself. Second of all, maybe toss a fish on your hook every once in a while. Okay, I'm Dan Fitzpatrick, and I'll see you next time.